All right, vid number 2. Number 1, number 2. Number 2. Wolfstreet.com, Wolf Richter. 2 issues. Again, this is most of what I talk about, if you didn't already pick up on this or not, is about major bad problems coming to us via economy, financial side of things. And I don't know if any of us knows precisely how it's going to play out, but we do know it's not going to play out in a nice way. I can't find a single reason or way that I could really say, oh, that could be fixed by doing this, or that could be, well, you can fix those things. It would be the equivalent of me telling you, oh, you want to fix that boat of yours? Yeah, bring it over here. And you bring me a boat with 14,000 holes in it, and if I touch it anywhere, it's going to crumble. Yeah, I got to fix. Son or daughter, whatever you got, son or daughter. Son, give me that blowtorch real quick. Thanks. Let me just set this. Everybody stand back. Let me just set this thing on fire. Let it implode on itself. Okay, it's fixed. Well, so you fixed the problem. But what was the fixing? You destroyed the boat, right? So the debt has to be destroyed. The derivatives have to be destroyed. The fake market system, where the United States has the pleasure of rigging everything. We get to rig commodity prices. We rig, oil, gold, silver, food, wheat, corn, all of it. It's all commodities, all traded with pieces of paper. The rest of the world's not going to stand by when all this goes down and say, you know what, let's let the United States keep doing this. Let's let them set the price of corn today where it hurts us. Let's let them set the price of wheat today and we're a wheat exporter where it hurts us. How about oil producing nation? Yeah, we produce oil. Let's let the U.S. set it on their rigged exchanges, again, the COMEX market. So unfortunately for some people, if you come to my channel looking for feel good, happy days, it's not the right channel. I want it to be there. I want one day for me to come out and be able to do that. Hey, America was made great again. Donald Trump did it. Oh my goodness, he wiped away the debt, the derivatives. Somehow all these countries agreed to something where we didn't have to feel any financial pain and we just started over, and wow. But that has never, listen to me, never, ever, ever happened in the history of this planet. So should we but things have changed and technology has changed, Joe. The good guys are winning, perhaps, the people like Trump. Okay. But those good guys aren't in charge of the banking system right now, or the derivatives. And even if they were, they took over from the bad guys, if you will. And now they have, they have a time bomb in their hand, and hot potato, what do we do with this thing? Oh my God, when's it going to go? Is it going to go off in our time? Oh my gosh. Oh yeah, it's going to go off in your time. So, haven't really spoken about Mexico as far as debt, liquidity problems. Wolf Richter has got an article here. Actually, John Quijones, or Quijones, actually. At 49% of GDP, Mexico's public debt may seem pretty low by today's inflated standards. And I'll be the first to tell you that yes, it is. I didn't know there was a freaking country on the face of the earth that wasn't already at 100% at least of debt to GDP. But for whatever reason, Mexico, 49%. It's a mere fraction of the debt loads amassed by bigger, richer economies such as Japan, 229% of GDP, Italy, 133%, and the United States, 104%. But when it comes to debt, everything is relative, especially if you don't enjoy the benefits that come with having a reserve currency denominated printing press like the U.S. In Mexico's case, it's not so much the size of the debt that matters, it's the rate of its growth. In the year 2000, the country had a perfectly manageable debt load of roughly 20% of GDP. Today, it is 2.5 times that big. Last year alone, the Mexican state issued a grand total of $20.31 billion in new debt, the largest amount, by the way, since 1995, the year immediately after the tequila crisis. Tequila crisis? Was it like a tulip bubble? What the hell was that? I don't even recall that. What the hell was the tequila crisis? When the country needed an international bailout to rescue its entire banking system from collapse. The money it received also helped repay a number of giant Wall Street investment banks, there we go, that had gone all in on Mexican assets. Imagine that. So that's why he needed the bailout, to give the bankers a bailout back in 1995. So that means the savings and loan crisis of the 1980s, banker bailout. This thing with 1995 Mexico, banker bailout. 2008, huge banker bailout. Boy, sure pays to be a bank, doesn't it? There are plenty of reasons behind Mexico's current debt issues. Top of the list is the dramatic reversal of fortunes of the country's shrinking oil giant Petróleos Mexicanos, a.k.a. Pemex, which until a few years ago provided as much as 1/3 of the Mexican government's national budget. After decades of bad management, lack of vision, negligence, abuse, and in many cases corruption, in the words of Mexico's Business Coordinating Council, Pemex is now bleeding losses and buckling under $100 billion of debt. If Pemex is unable to service its debts, Mexico's government will have to step in again. The problem here is that Mexico's government is also struggling to rein in its own debt addiction, with some states already on the verge of bankruptcy. One state governor, Javier Duarte of Veracruz, did so much fiduciary damage during his mandate that he's now on the run after allegedly misappropriating vast sums of public funds. Another reason why Mexico's debt keeps growing stems from its 1994 rescue of its banking sector and international bondholders, of course. The debt the government took on was supposed to have been liquidated within 20 years. But it has continued to grow instead. Thanks to the wonders of compound interest, the debt is now worth $44 billion US dollars, 35% higher than it was in the year 2000. Despite the fact that Mexico has already paid tens of billions of dollars to banks, international financial institutions. Again, gotta love compound interest. Gotta love being able to print a dollar, and on that dollar is attached interest that's not printed. So you got to get more money to pay off the first dollar. I got to borrow more, print another dollar. Now there's $2 printed, both have interest on them. How does that end? Stick around for a little while longer. I think we're all about to find out. Globally, by the way. Mexico's top auditor, the Federal Audit Office, just came out with a bombshell report showing that a staggering 73%, or 72.9 to be honest with you, 73% of the new debt Mexico's government issues today is used to repay the principal, repay the principal on its maturing old debt, while 13.9% goes towards servicing the interest payments. That leaves just 13.2% for investment projects or productive activities, part of which is, no doubt, skimmed off by corrupt officials and businessmen. The debt continues to grow at a much faster rate than Mexico's economy, whose growth is forecast to slow this year to 1.5%, compared to last year's 2.4%. To make matters worse, much of Mexico's new debt is in foreign-denominated currencies. Between 2015 and 2016 alone, the total amount of euro and dollar-denominated debt it issued rose by 46.2%. Mexico is not the only emerging market that has developed an unhealthy appetite for foreign currency-denominated debt. In the first 2 months of 2017, emerging markets issued over $100 billion in USD and euro bonds, beating a previous record set for the same period in 2014. The main reason for the latest spike is the lower cost of issuing debt in the wake of the U.S. elections, with yields on emerging market bonds falling by an average of 50 basis points, which would be about 0.5%. But that is not likely to last, especially with the Federal Reserve expected to raise rates in the coming months. And we may find out around the 15th or so this month, it might be time. Along with the debt ceiling fight, we may hear also that, Federal Reserve is going to raise rates. However, the prospect of rising rates will, much like last orders at the bar, has merely intensified the thirst for dollar-denominated debt. Quote, the yields are attractive and the outlook for rates and bear market risk are pushing issuers to evaluate funding earlier this year, said Samad Sirohi, the director of debt capital markets for Central and Eastern Europe, the Middle East, and Africa for Citigroup, the bank that's organized most of the bond sales for the region this year. Yield-starved investors, after years of central bank-imposed financial repression, can't resist the higher yields of riskier markets for now, offering almost double the 2.5% of the 10-year Treasury yield and many multiples of the 0.335% of Germany's 10-year yield. Emerging market debt funds have reported $7.4 billion of inflows so far this year, surpassing the combined flows into U.S. junk bonds and loans during that same period. But if emerging market currencies fall against the dollar and the euro, which they have, the cost of servicing dollar and euro denominated debt is going to rise. And that's when the strains will begin to show. In Mexico, foreign investors hold around $100 billion of the country's local currency government debt, the most for any emerging market economy. That's almost 20 times what it was 20 years ago. They also hold billions of euros worth of corporate bonds, which are also showing signs of strain, prompting some Mexican business leaders to call for new programs to be implemented before the situation causes a large-scale crisis among Mexican companies. Got a sneaky suspicion that that's exactly what's going to happen. Large-scale crisis will be on the horizon quicker before they could do anything. The most ominous sign yet came last week when Bloomberg reported sources saying that the Bank of Mexico, or Banxico as it is referred to, had sought a swap line from the Federal Reserve in case of liquidity problems, which immediately triggered furious denials from Banxico. Quote, I can say clearly and unequivocally that we are not in the process of asking for any credit line from any authority, said the central bank's governor, Augustus had only saved some room for later, who has postponed by 6 months his departure from the bank, initially scheduled for May. If the allegations are true, they imply that Mexico's government and or corporations are beginning to feel the early pangs of a dollar shortage. One thing is resoundingly clear. The Mexican government needs to get a handle on its debt situation. And if I'm a betting man, or maybe not even a betting man, if I'm just someone who lives, eats, sleeps, and breathes this stuff and reports it every day on YouTube, got a sneaky suspicion that the Mexican government's not going to get a handle on its debt situation. Is there any country out there that has? Actually, the answer is yes, there is. But it's only one. Iceland. Iceland has done wonderful things. Everybody else aside from Iceland, pretty much on the face of the earth, is in the same boat. And there's a lot of countries on this planet. All have central banks. All have fiat paper backed by nothing currency. They all borrow money into existence. And they have these swap lines with the bigger buddies, the bigger club, America, EU, Euro. And it's going to implode on them ultimately. Again, this whole thing was designed to go down and bring everybody down with it so that you can't say, oh, that country, let's go there. Nope. Everybody's affected. We're all in this together. Let's figure out how to get out of it. Oh, I've got an idea. One world currency. How's that sound? Because then we can't have trade wars, because trade wars are essentially part of currency wars. You devalue your dollar, your exports are good for other people who import them because they can get it cheaper because your dollar's been devalued. But then that country says, well, we export stuff too. And some of the stuff you export, we export. And now we're losing business because you devalue your dollar. So, yeah, we're going to devalue ours. You can make a case, as I've said, you can make a case why a single currency system would work fine. Because you can't manipulate the price. But at the same time, you say, well, what if that currency was gold? Correct. You shouldn't be able to manipulate the price of it because everyone's using it. It's one thing. Not one entity should be able to set the price. Well, then how do you know how much it's worth? Again, free markets would figure that out. Currently, gold is rigged also, but not because of holding a gold bar or coin in your hand, bringing it somewhere. Where do they get the price? How much are you going to pay me for this today, sir? Oh, well, let me get online and see what the spot price is. Oh, hold on. The what? The spot price. What's the spot price? The spot price is set by the club on their paper exchanges. But they're just transferring paper back and forth. That shouldn't set the price of this thing in my hand. If I was a used car salesman and people were online trading pieces of paper back and forth for used cars, and depending on how much they sold or bought, change the price of my car, that's not fair. That's not fair at all. I mean, I have the asset. I'm the one with the asset. I set the price. I have the asset. It's mine. It's in my hand. It's hard. It's physical. I set the price. No. We have these paper contracts. And even though I say paper, in all honesty, it's not even paper. It's a digital entry online in the system. The right hand sold to the left hand, and the left hand then sells back to the right hand. And as you saw the other day, silver contracts, 23,000 contracts, each for 5,000 ounces, 115 million ounces, liquidated within minutes, $2+ billion worth. And as I said, not 1 ounce, not one flipping ounce left anywhere. No warehouse, bullion banks, secret storage facility. Nope. Account ledger. Account A has sold 23,000 contracts, and account B bought all of them. After the price fell, of course. Then they bought all of them. Okay, so all this, now the digital numbers are in your account. Nothing happened. You didn't have to call the warehouse. Hey, get the forklifts ready. Tell the guys they're going to work overtime. We've got 115 million ounces. It's like 3,000, 3,000 something tons? Or something like that? It's going to take you a while to move that. We got to get the guys to get the big forklifts in here. Nope. Everybody, false alarm, go back to bed, come into work normal time tomorrow. Nothing's being moved. So, again, you could argue why a single currency would be a good idea. And that's what the club's banking on. So that when all the financial pain comes, and they're going to blame it on this country, and that country's going to blame it on you, and we had a trade war, and you devalued your dollar, we had to devalue our dollar. No. They're going to go back and forth. And as Trump said, I talked to the Chinese president and the Japanese president or prime minister. We understand we need to level the playing field. We've got some plans in the making, and it's going to happen sooner than anyone thinks. And I'm dying to know, Mr. Trump, Mr. President, what was this plan? You said it's going to be here sooner than anyone even thinks. That means you have some plan on paper. What is the plan? That's what I want to know. We're going to find out. Again, we will find out. But this is just... this is insane. I'm looking at another one of his articles here. This is worse than before the last 3 crashes. This chart shows multiple compression is coming. How long can this surge in stocks go on? That's what everyone wants to know. Projections range from forever. These projections have become increasingly common. It's already finished. That's a fairly wide range. But for example, a stock trades at a price that will give it a price to earnings ratio of 20. Stock price is 20 times earnings per share. When earnings per share remain flat over time, but the stock prices rise, or the price of that stock rises, then the price to earnings ratio, the multiple, expands. When this spreads across the market, even when aggregate earnings remain flat, it means rally. And earnings have been flat since 2011. The other day I posted a chart that showed that earnings of the S&P 500 companies in quarter 4 2016 were back where they'd been in quarter 4 2011. So 5 years of earnings stagnation. Yet during those 5 years, the S&P index soared 87%. The thing that changed during those 5 years was the price to earnings ratio. This combination of flat earnings and soaring stock prices, and thus soaring price to earnings ratios, is historically speaking not a good thing when it drags on for too long. This chart shows the S&P price to earnings ratio on every January 1st of the year. This aggregate price to earnings ratio has nearly doubled from 14.9 on January 1st, 2012 to 26.7 on March 3rd, 2017. Flat earnings, no problem. But wait, the problem for stocks is the inevitable multiple compression. Multiple expansion and compression go in cycles, like boom and bust cycles invariably. Multiple compression with flat earnings means sell-off. And when this combines with an earnings decline, the sell-off turns into much worse. It happens with regularity. This chart by John Alexander at Macro Charting tracks the percentage increase and decrease of the price-to-earning ratios, so multiple expansion and compression going back to 1979. I'll open this up. I marked the 4 record periods of multiple expansions in months. The first 3, which ended in 1987. Anyone remember that date? October 1987 stock market crash. Next date, 2000. Anyone hear of something called the tech bubble burst? And 2009. Anyone remember that one? 2008, 2009? Turned into periods of multiple compression associated with blistering crashes. So, again, these are those things I always talk to you about: thermometer, temperature gauge, etc. That's what this is. That's what I'm talking about. These are the things that says we absolutely have a problem. It's cyclical. We can see it. It should be here any freaking second. Markets rally, no news. Markets rally, good news. Markets rally, middle of the night sleeping, all of planet Earth killed by an asteroid. Markets rally the next day. Well, hold on, there's not even humans left. What the hell? Could you imagine being a little alien flying by and seeing that? Oh, well, let's stop here. Hold on, I want to see this. Look at these freaking idiots. Yeah, we got to check this out. We just passed by this huge comet. It's actually, the comet's going to hit Earth. Asteroid, something, it's going to hit Earth. Oh, no, get the popcorn. Let's watch this. I don't have any left. Oh, well, let's go down there. Let's go make some symbols in someone's cornfield, and we'll take the corn when we're down there. Oh, no, you don't want that. That's genetically modified. These idiots are modifying their food genetically? Yeah, that's what I said. It's just stay up here. And then you watch it. Mass extinction event just happened. But I guess some battery backups and things like that were online. And they have these 3 major stock market indexes, the S&P and the Dow Jones and whatnot. This is crazy. There's not a human alive. And the markets are rallying. I guarantee you that would happen. Because it's all controlled by computers and the riggers who run those computers. You might know them as central banks and the big banks. Anyways, this is hard evidence. This is something that tells you, as much as I'm hoorah Trump, yeah, go Trump, make the America great again, go after these criminals, go after the pedophiles, go after all of them. This is essentially the comet I told you about, that it's been en route to you for the last 500 million years. It just finally made it over here. You're the bullseye anyways, and you've had 500 million years of human activity to deal with stuff, and it's about to go away. That's kind of what this is. Like, stock market, this crash, it's coming. Here's the data. You could go back, 500 million years, in this case, 20, 30 years, and look at the cycle. My huge analogy here. This is, again, math, numbers. You cannot fight with, argue with math. Only thing is, they can extend things a little bit, right? Because if you look at these little red marks here, you can tell the first one, 1987, wasn't that long, but then the next one was kind of long. And the next one wasn't too long, but then we have this one. Oh, it's kind of longer than all of them so far, right? So where's the one in 2017 or 18 going to be? And that's a question I can't answer. But the point is, you'd be a fool to think that they'll just magically fix all this without any kind of financial pain that's going to affect you. You'd be a fool to have faith in these criminals.